Right now, I want to talk about investment strategy, and specifically, I wanted to share my personal investment strategy. There's a difference between value investors and speculators. There's investing and speculation. When you are doing a value investment, that is because you have analyzed a company and you believe that they have certain attributes that can help mitigate risk with that company, assuming that you'll eventually actually retain profit from investing in that company. And then there's speculators that are basically betting that if I purchase this stock at this price, somebody down the line will pay even more for it. It usually has very little to do with the actual value of the company and any sort of hardcore analysis of that company. And that's what I think the main difference is to start off with my investment strategy. You want to be a value investor, somebody who's making decisions based on the actual functioning of the company, and not just betting your money hoping that somebody else pays more for it when it has very little to do with the company itself. So one thing you want to look for when you're picking stocks is you want to see if a company has a durable competitive advantage. You want to make sure a company has the strength they need in order to give them an advantage over their competitors in a specific market. One way to find out if a company has a durable competitive advantage is by analyzing their financial statements. So I'll talk through a few things that I actually look for when I'm looking for a company to invest in. There's three main things I look for when analyzing a company's financial statements. That's ROE, return on equity, gross profit margin, and net profit margin. You get ROE by dividing net income by total stock equity. And this basically helps measure the profitability of a corporation in relation to its shareholder equity. Usually companies that have a good, sustainable competitive advantage have a high ROE percentage. High returns on equity basically mean that a company is making good use out of the earnings that it's retaining. So this is an indicator that a company might actually be a good investment. It's not the only thing to look for, of course. Another thing I look for is the gross profit margin. You find gross profit margin by taking total revenue and subtracting cost of goods sold. That's your gross profit. You get the gross profit margin by dividing your gross profit by total revenue. You know a company has a good competitive advantage if they have a high gross profit margin, because that actually means they're able to price their products and services in excess of how much it actually costs to produce them. Companies that don't have a good competitive advantage actually have to lower their prices, which is in turn is going to affect the profitability of the company, which we can see in gross profit margin. Basically, if you're investing in a company, you want to see that it costs them very little to make a lot of money. A step further from looking at gross profit and gross profit margin is net profit and net profit margin. You get net income by taking total revenue and subtracting cost of goods sold, total of expenses, taxes, etc. And that's what the company has left, their net income. So you take net earnings and divide that by total revenue and you'll get your net profit margin. Sometimes companies have a net income in the negative, meaning they're losing money. I tend to stay away from companies that are losing money. That has a little bit more to do with the speculative investing that I talked about. People might see a company as losing money in their net income, but assume that in the future they're actually going to be making money. So you're kind of betting in the future of the company, but it's not necessarily a value investment based on any of the fundamentals, knowing that they have a good financial system kind of working within. I like to invest in companies that have a positive net income and a good net profit margin, because to me, it just means that they are making money. If you look over the score of like 4 or 5 years, you want to see an increase, a steady increase in net income, meaning that they are improving and becoming more and more profitable and using their resources well every single year. So those are three things that I look at. There's so many financial ratios and tools to look at. I wanted to keep it really simple here. So again, return on equity, gross profit margin, net profit margin. Those are three simple, good formulas to look at when you're trying to pick a company to invest in. I want to show you an example of what this looks like in practice. So I'm actually going to highlight a company that I own stock in that has amazing financial statement and really good numbers, and that's Visa. So we're going to look at it right now. Okay, so if we're going to look for Visa Inc.'s return on equity, we're going to go to Yahoo Finance, which I really like, and we're going to scroll down to their income statement after we look for Visa, we're going to look at their income statement, and we're going to take net income right here, which is this number, and we're going to remember that. You're going to write it in your calculator, you're going to write it down, and then you're going to scroll up to balance sheet, and you're going to take that number and divide it by total stock equity. And this should get you around 30%, which is a really good number for Visa and for any company. And if you actually look over here, it says Visa's ROE percentage is ranked higher than 98% of the 494 companies in the credit services industry. So clearly they are doing something really good when it comes to their return on equity percentage. All right, so you're gonna go to their income statement and you're gonna look at total revenue right here. And you're gonna look at their gross profit. In the income statement, they already get the gross profit for you. You don't have to do it, but it's such an easy equation. You just subtract the cost of revenue from total revenue, and then you get the gross profit. And for the gross profit margin, you take that number and divide it by total revenue. And you should probably get about 81%, which is an incredibly high number for gross profit margin. Now, if you want to find the net profit margin, you're going to look at net income, which we already looked at before, and you just divide it by the total revenue, and you'll get probably around 52%. So for Visa, they have an ROE of 30%, a gross profit margin of around 80%, and a net profit margin around 50%. Those are three really good numbers in relation to what their competitors have and what you'll find with a lot of other companies who are much lower percentages with all three of those points. So that helped me pick Visa in the past, and I have been happy with that decision ever since, and they continue to rise in the stock market. Another thing I wanted to bring attention to regarding my investment strategy is that I'm investing for the long term. That is part of value investing. I'm investing in companies that I think are going to continue to grow and continue to have a durable competitive advantage in the long term. I'm talking 5 years, 10 years, 20 years, 30 years from now, holding these companies, buying more stock in these companies, and expecting to see my profits increase over time. This isn't investing to buy some stock today and hope that I get a giant jump a month from now. That's more speculative, that's more gambling. I'm not really interested in that. If that's your thing, that's fine, that's cool. If you're a day trader, that's dope. Get your money however you do it. That just doesn't excite me. I don't like losing money. So I like to mitigate risk and invest in companies that have valuable financial fundamentals and that I can be sure, as close to sure, that I'm going to be retaining profit down the years. So I hope this has been helpful. I hope this gives you a little bit of insight into some sort of investment strategy if you're wanting to get started or if you want to fine tune what you're already doing. If you have any questions, let me know. I'd love to hear about what you do with your investment strategies and companies that you look for and how you make your investing decisions. Thanks for watching, and I'll see you later.